Well, good morning, everybody, and welcome to our webinar this morning. Delighted that you can join us. As the title tells you, this is all about preparing for the new domestic VAT reverse charge, which becomes live, I believe, on the 1st of March. I'm joined this morning by Craig Hughes and James Hurst. So Craig is our tax director, James is our VAT director. Welcome to you both. And they're going to hold the formal part of the presentation this morning, and we will make time at the end of the presentation today for a live Q&A. So if you're used to using Zoom, you'll see the icon on the toolbar on the bottom that says Q&A. Please click on that, and that gives you the ability for you to post any questions that you'd like to ask Craig or James as we head through the webinar this morning. We'll try and answer as many of them live as we can at the end. And any that we don't get round to answering, we will capture as part of our recording of this webinar today, and hopefully Craig or James might be able to come back to you on a one-to-one basis. As I mentioned, we are recording, so we will make an on-demand version of this webinar live on the website, either later today or certainly by Monday morning. So if there's anything that you've missed or you need to recap on, that recording will be available to you. So at this point, I'm going to hand over to Craig and James, and I will see you for our Q&A later.
Thank you, Jo, and good morning, everybody. So yes, we'll be discussing the new domestic VAT reverse charge this morning. So just by way of a bit of background, it's third time lucky for introducing this piece of legislation. Originally, it was going to be October 2019, then delayed to October 2020. Of course, coronavirus came, which meant quite sensibly it was delayed. But now it's definitely, or as definitely as we can say, it's coming in from the 1st of March this year. So less than 2 weeks away. So what is it? Well, it's a reverse charge mechanism that applies to suppliers within the construction industry. The reason why it's been introduced, it's from HMRC's point of view, it's an anti-fraud measure. They've introduced similar reverse charge mechanisms for missing trader fraud and certain overseas transactions. So it's a way HMRC see as very effective in combating fraud, and the construction sector is an area that they perceive that this is potentially quite widespread. They reckon about 150,000 businesses will be affected by this new regime. So it will be something that we will all come across in some form or another. And in essence, it will change the way in which businesses charge VAT within the construction sector. So what's changing? So the regime will affect how VAT is charged between subcontractors and contractors and anybody else in the chain of supply where the contractor is within the CIS, construction industry scheme. The rules are mandatory. There's no opt-in or opt-out, and likewise you don't have the choice of applying it to certain invoices or otherwise if you fall within the rules. It applies to a supply of construction services and materials. It applies to any supply made at the standard or reduced rate of VAT between two UK VAT registered businesses. The customer needs to be registered for CIS, and it applies where the customer intends to make an ongoing supply of construction services. And James will come on to this later, but there's a concept of an end user when the rules won't necessarily apply. There are also certain rules around if there's a connected party relationship between two parties to the transaction. It doesn't apply to zero-rated supplies, and it doesn't apply if the customer is based outside of the UK. As this is linked to the construction industry scheme, we thought it'd just be wise just to give a brief reminder in terms of how the CIS operates and where that can apply. So the CIS, you have this concept of either being a mainstream contractor or a deemed contractor. So a mainstream contractor is any person who's undertaking construction operations or activities, and a deemed is anybody who isn't a mainstream contractor but incurs a significant amount of expenditure on construction operations. And you have this methodology of looking at a 3-year period and an average of £1 million per year expenditure in construction operations in that 3-year period. One of the key distinctions between the reverse charge and the CIS is that the reverse charge applies to the whole invoice value, so labour and materials cost, not just the labour costs. So it's just a bit of a reminder of CIS and how that works. What I'll do now is hand you over to James, who will go through more of the detail as far as the domestic reverse charge is concerned.
Thanks, Craig. And yeah, as Craig says, I'm going to pick up and go through some of the detail about who's affected. As Craig says, it's third time lucky or unlucky, maybe, depending on your perspective on this. And I'll get into a bit more of the detail. And I think it's worth, I just want to emphasize Craig's opening comments about being mindful that this is an anti-avoidance measure. And we'll come on to look at some of the risk areas and how HMRC might police this, and what the penalty position might be if you get things wrong. And because it has been delayed, the implementation's been delayed for several years, that there have been a few tweaks and developments, refinements to the measures have emerged right up until this point. So getting on to the next slide is looking at contractors and subcontractors. And so the basic point then is, as we've heard, is that if you're a VAT registered subcontractor and you're providing a service and the related goods as well to a VAT registered contractor who's CIS registered, and you've got evidence of all of these things, then you no longer account for VAT in the normal way from 1st of March onwards. And it's the customer who accounts for VAT under the reverse charge by making a supply to themselves. And we'll get into the detail. So what we thought was to run through an example of how this works, just so that everyone's clear on it. The example we have is John the roofer and contractor Bob. The names have been changed to avoid any similarity with real persons. So they're both VAT registered, both CIS registered. They're supplying, there's a supply of construction services from John the roofer, which would normally be subject to VAT, but from 1st of March in principle will be subject to the reverse charge. So all the basic conditions have been met and established between the parties. So at the moment, if that supply took place this month and was invoiced this month, John the roofer, under the old existing VAT system, would invoice contractor Bob for, in this case, £100,000 plus 20,000 VAT. So it'd invoice 120,000. Under the new system, then John the roofer invoices 100,000. And his invoice has got to say, have wording on it that says that the CIS reverse charge applies on his supply, and the applicable rate of VAT is 20%, which it would be if the normal rules apply. The contractor Bob pays £100,000 to the supplier, and then he shows the 20,000 VAT as an output and input on his same VAT return. And as a consequence of that, the VAT on the supply is accounted for by the customer, and the John the Roofer receives only £100,000 and not £120,000, which he would have to remit to HMRC. And we'll come back onto a point about cash flow here. Now, in this particular scenario, contractor Bob is in a supply chain, and he's making an onward supply to a developer who then is working for the end user. And the point there for the customer here, contractor Bob, is that he doesn't have to pay out the £20,000 of VAT to John the Roofer, but he's also got a question to consider in his mind in terms of his onward supply. Does it also fall within the reverse charge scheme or not? And then he has to make a decision in terms of the status of his own customer and agree whether VAT is chargeable or whether the reverse charge applies. So that's a basic kind of scenario. There are various there's actually quite a lot of recent or fairly recent HMRC guidance on this that gives some quite helpful examples of some of these areas, and some of the examples look into and I'd certainly urge everyone to read the HMRC guidance, but it looks at the areas of things like labour only contracts. And there's a particular section that looks at staffing arrangements and agency supplied workers. So if you've got a scenario with a labour only contract with an employment business, are they supplying staff that would be still a standard rated supply under existing rules from 1st of March? Or are they supplying, making a supply of services that would, in principle, could be subject to the reverse charge? And there's lots of tribunal decisions and court cases on the area of suppliers of staff and employment businesses. But broadly speaking, you're supplying staff if you supply someone who comes under the control of the customer and the day-to-day direction of the customer, then that's likely to be a supply of staff, which will fall outside of the new reverse charge procedures. And I think we ought to move on to the next slide, which is then looking at the importance of end users, which was one of the concepts that Craig made in his opening comments, that this reverse charge does not apply where you've got a supply that would in principle be subject to VAT at 20% or the 5% reduced rate if the supply is being made to an end user. I think another point to make here is that the reverse charge doesn't apply where the supply would be zero rated, and we'll come on and talk a bit about domestic construction in a minute. So the importance really is establishing whether you're making a supply to an end user, and if you are, then the normal rules apply and not the reverse charge. So an end user might typically be a non-VAT registered customer. It could be a consumer and a domestic consumer. And it's an end user could also be this new concept of what's termed an intermediary supplier. So an intermediary supplier is a business or company typically that would be closely connected with the end user. So it might be something, for example, like the end user might have a captive design and build company within the same corporate group that would be buying in the services on behalf of the end user. And it's worth having a look in detail at the HMRC guidance on this, because again, they give various examples. But broadly speaking, an intermediary supplier would have some kind of relevant interest in the land, like there might be a landlord-tenant relationship with the end user. So so an end user could be someone who is buying in the services and not supplying them on, it could be a domestic consumer, or it could be this other category of an intermediary supplier. So what's really important here then is to, as a supplier, is to obtain confirmation of the end user status of your customer to make sure that you get it right and charge VAT when you're still required to. And HMRC gives some guidance on this, and they say, for example, that in terms of end user status, they're almost suggesting you can make some assumptions, which makes me a little bit uneasy, I think. So, for example, they say that if your sales operation is or your network is clearly geared to a domestic consumer market, then they say it's not necessary to check out the VAT, CIS, or end user status of your customers, that normal VAT rules apply. Although if there's any doubt, then clearly check it out. But I think in saying that, HMRC, I think there is potentially a risk here in making a sort of general assumption. It might be clear cut depending on what the activity is, but I'm always a bit nervous about making assumptions. Similarly, HMRC say if you often deal or mainly deal with end users, then you could, for example, include a statement in your standard contract that you assume that your customer is an end user unless they tell you otherwise, and then that would put the onus onto the customer to say that they're an end user. And in all of this, there are responsibilities clearly for both suppliers and customers, and a kind of overall, a lot of the guidance is geared towards an assumption that where suppliers are between VAT registered businesses that are within CIS and they're not zero rated construction suppliers, that the reverse charge will apply, and that there is an onus on the customer to actually push back to the supplier and make a statement that they are the end user. And so what is clearly important here in all of this is that if you are a supplier, you should ask your new customers to verify their status. And what I've already seen with clients is suppliers are sending out like a one-page mini questionnaire saying, can you confirm that you're not an end user? Can you give me your VAT number, CIS registration number, etc., and sign this declaration? And HMRC gives some suggested wordings in their guidance along the lines of we're an end user for the purposes of the VAT Act, and please issue us with a normal VAT invoice, and we won't account for the reverse charge. So they give several different types of wording as a way of simplifying it, but certainly building it into your contract or standard terms might be a way of dealing with this. There's something in the guidance as well. One of the questions that's come up is, well, can I assume that, for example, local authorities will always be an end user? And I think there's a danger in making these assumptions. I think you need to check it out each time, because local authorities these days are likely to be an end user, but sometimes nowadays do commercial style developments and residential developments in order to generate finance. So they may not be an end user depending on the particular development project. Going on to the next slide, which is looking at suppliers of services. HMRC, again, I won't go into this in exhaustive detail because there's quite a long list of services within HMRC's guidance, and I would urge you to follow the link that's shown in the slides here, because what HMRC do is they set out quite a long list of services that in principle would fall within the reverse charge. and also quite helpfully a list of services that they consider would fall outside of the reverse charge where normal VAT rules will apply. So the list of things that fall within it are broadly construction, demolishing buildings as well, repairs, extensions, and so on. But there's also, to make things a little bit more complicated, there's quite a section in the guidance looking at, for example, new build residential projects. And so we know that in many cases, a new build residential project will be involve zero rated supplies that fall outside of the reverse charge, but there can be some standard rated supplies in there. So for example, in the guidance, they talk about, HMRC talk about if there's a supply of goods only, then that's likely to have normal VAT rules applying. But if there's a supply and fit that's got a mixture of goods and a supply service that falls within CIS, then that will drag the whole supply into the reverse charge. The guidance also gives through examples of what happens if there's a reverse charge supply already between two parties on a construction site. But if both parties agree, then any subsequent construction supplies on that site can be treated as reverse charge supplies going forward without necessarily having to check every single supply in there. There's also some detailed guidance of if you're involved in new build residential, for example, you have things like supply of goods where the blocking order applies and the developer is unable to recover VAT on things like ovens and hobs. Well, if you supply and fix those goods that are deemed as goods not ordinarily installed in new builds, then your supply is outside of the reverse charge and is standard rated. So if you're involved in that sort of thing, again, I think it would pay to study the guidance in more detail. There's a whole section on scaffolding, for example, that talks about whether you make an all-inclusive supply that might be within the reverse charge, or if you make a supply of scaffolding where you make separate charges for the hire of the scaffolding and the labour element. Well, if the labour element related to a residential build, then that might be zero rated, and the hire charge might be subject to the reverse charge. So it depends on how things are structured. One of the more recent changes that's come in is a new test, this new concept of the 5% disregard. And it says that if you've got a mixture on an invoice of reverse charge work and non-reverse charge work, so for example, you're doing something for one customer where some of it is received by the customer as an end user and some of it's not, then if the reverse charge work represents less than 5% of the total value of the invoice, then the normal VAT rules apply to the whole supply. Whereas previously in the early sort of draft iterations of the guidance, it said that if there was any work at all that was within the scope of the reverse charge on an invoice, it brought the whole invoice into the scope of the reverse charge. So that's a little simplification that has come in. So moving on then, in terms of points to consider now, it's about, if you haven't done so already, it's about looking at your invoicing requirements, about including relevant wording on your invoices. It's also thinking about things like your cash flow. This has been one of the big sort of bugbears, I think, around the system is where you've got no longer having your customer pay you the VAT, and you can use that VAT as working capital during the VAT quarter. If you're now making reverse charge supplies, then you won't have the use of that VAT anymore. And there are a number of points to, I think, probably going on to the next slide where I've summarized some of these, that to rattle through some of these in the time we've got. But some of the issues that you might face, I think an important one right at the moment is around tax points. Normally, the basic tax point is when you perform a service. This kind of standard way of looking at a tax point is that an actual tax point is created when you either receive payment or raise a VAT invoice. The HMRC guidance is definitely worth a study because it sets out pretty clearly about what to do when you've got a supply that is taking place that spans the introduction of the scheme from 1st of March in this transition period. And so, if you've got a tax point arising before 1st of March, it's under existing rules. After 1st of March, it falls under the new scheme. So there's some good guidance in there that also looks at the treatment of existing contracts, because you can have a situation whereby you diligently as a supplier and customer agree that for example, that the customer is an end user and normal VAT rules apply, but then that could change during the course of a contract because the end user customer decides to do something different. And so what happens there? And HMRC gives some pretty practical suggestions around that, and say that if that change in the nature of the contract happens midway through a VAT invoicing period, then you can elect to either keep the existing treatment until the next invoice or apply the new treatment from the start of the month. And so you've got a bit of flexibility there, rather than have to split an invoice between reverse charge and standard rules. But certainly for contracts starting after 1st of March, then you've got to consider that whether the reverse charge will apply. There are a couple of key exclusions from the scheme, like if you use cash accounting or the flat rate scheme, you can't account for reverse charge supplies within that. And that does certainly, there's a point here around, as I said, around cash flow, that if your cash flow is going to be dented by not receiving payments of VAT from your customers because the supplies you make now fall within the reverse charge, then you might want to do something like switch to monthly VAT returns in order to get your VAT on expenditure back more quickly. I think a really important point to emphasize in the time we've got available this morning is around penalties, because we mustn't forget that the whole purpose of this new scheme is that it's an anti-fraud measure, and it's driven by HMRC trying to find a way to attack the tax going missing predominantly in labour-only type supplies on big construction projects, where subcontractors would charge VAT to the main contractor, get paid that VAT, and then disappear with the VAT rather than hand it over to HMRC and then pop up somewhere else with a new registration and start again, and with tens of millions of pounds going missing every year. So it's very much an anti-fraud measure, and we all know that, we've now got to get to grips with this new system. We've got to make sure that we get it right and verify the status of our customer. We've got to put the right wording on our invoices. HMRC give examples about, saying it's a reverse charge supply. Get the accounting systems right as well to account for the VAT correctly. And HMRC do say in their statements that they recognise that all of this will cause some difficulties, and so they mention their famous light touch in dealing with errors made in the first 6 months of the new legislation. As long as you show that you're trying to comply and that you've acted in good faith. So then it becomes really important, I think, that you show those things, that you document what you do, that you've verified the status of your customer, that you've thought carefully about whether the supply falls within the scope of the new rules or not. But interestingly, there are things you can do, such as checking out the VAT number of your customer, because you can look it up. But interestingly, I was looking yesterday at the HMRC's guidance, and it provides a link to click through to check the VAT number. But it takes you through to the old EU system that we're no longer a part to since the 1st of January. And HMRC have got their own system now for checking out VAT numbers, but you need to look separately for that. But I think in my mind, the risk is, what happens if you get it wrong? And people have said to me, well, if I've charged VAT by mistake and it should have been within the reverse charge, kind of what's the problem really? Because I've charged VAT to someone who's fully taxable, they can recover it, it all washes through. But in my view, HMRC won't see it like that. They could come along to that customer and say, you've been charged VAT here by your supplier that is not VAT lawfully charged. So since it's not VAT, you can't recover it as input tax. And so we'll assess you to deny you the VAT recovery. And not only that, but because it's a reverse charge supply, you were obliged to account for the output tax on that supply under the reverse charge. So we'll assess you for the output tax as well. And you kind of think, well, can they do that, deny you input tax and account for output tax? Well, we know that HMRC do this in other fraud context. For example, with missing trader fraud, where they think a transaction is bogus and goods have been purchased as part of a fraudulent supply chain and maybe have not, the evidence of export is not there. They will in principle assess to disallow input tax and assess for output tax, so that there's a clear precedent for them doing this. And then if you've got that situation where your customer's been assessed for the disallowed input tax, they'll come back to you as the supplier and say, can we have a credit for the VAT? So you can issue them with a credit, but what if that happens at the start of a VAT quarter and they're demanding their VAT to make good their VAT position, and then you've got to wait till the end of the quarter before you can put that credit note through your VAT return and get the benefit of it? There could be quite a cash flow impact. So it really pays to give this a lot of attention to make sure that you get it right. There's also, I think, a point on the sort of errors here on VAT. It's about record keeping and recording. I think it's really important to make sure that you record what you do and show evidence that you've checked out people's VAT numbers and CIS registrations. I don't know, Craig, did you want to make a comment about typical CIS errors here?
Yeah, sure. I'll just pick up on that. I mean, just in general, CIS is an area where HMRC do see a lot of non-compliance, and the sorts of issues that they typically come across is things like incorrect and excluding activities from CIS, subcontractors overstating the material elements on their invoices or including the cost of their own plant. James mentioned scaffolding earlier, and hire of plant and hire of scaffolding is a classic area that HMRC look at when reviewing the CIS deductions being made. And likewise, including VAT around material costs, that sort of thing as well. And the failure to apply CIS in recharges between different entities within a group that can occur as well. So it is an area that's high on HMRC's agenda in terms of looking at non-compliance. So very similar to what James was saying on the VAT side of thing. It's important that documentation is in place, that any rationale behind making a decision on deductions is clearly set out, so it's clear what the reasoning was behind making a certain deduction. And if nothing else, that even if it might ultimately proven to be incorrect, that can help from a penalty position if you can show that you've taken due care and attention in applying the regulations. So I should just hand it back to you, James.
I think it's just a couple of closing comments. Then really, it's just emphasising it as Craig says. I think it's so important, especially from an assessment and penalty position, to show that you've been a diligent taxpayer. As long as you've covered it off in your contract or got your customer to sign something to certify their status, and you've used all your best endeavours to check out their VAT number and CIS number, and you thought about the VAT liability of the supply, then you're in the best possible position if something does go amiss. But we know that, as we said, errors can be made, and there are areas in VAT construction, typically subcontractors working on charitable buildings or what are termed relevant residential buildings like nursing homes, where subcontractors should always charge VAT, and only the main contractor who gets a certificate from the end user is entitled to zero rate. Those are areas where people do get the VAT treatment of their services wrong. Over the years, I've seen many examples of this. But now it becomes even more important because of the focus from HMRC, because of the new reverse charge regime, because they will be giving it a few months to let it run, and then having a look at people's records. And I think if they do see an opportunity to raise an easy assessment, I don't see why they would hold back. So the important things is to get familiar with HMRC's guidance. It's not really extensive. It's pretty clear, and it gives lots of examples of things like the wording to put in the invoice, the procedures that you can put into place, the wording to put into your contract, and so on, to make, and as long as you follow that, then it I think you're in a good position. I think that really concludes what we've got time to talk about this morning, and then I think Craig was going to pick up any questions on the Q&A. Well, not answer them necessarily all yourself, Craig, but
yes, fortunately.
Yes.
Yeah, just looking, and actually no questions have come in, so okay. Either it's been an excellently presented presentation and everybody is fully understood what the rules are, or people have gone to sleep, or that oh, actually, is there something coming in now? Here we go. Are landscape gardeners affected by this?
I don't think I've seen any mention in any of the guidance anywhere, and I've read the guide specifically of landscape gardeners, but again, it would be, do you meet all the conditions of, are both parties VAT registered? Is this a supply of construction services that would be VATable under the normal rules, etc., etc. So potentially, if it's seen as part of a construction, that would normally be a VATable service. I think we'd have to look in a bit more detail. I've read all the HMRC guidance, not just recently, but also last year and the year before, and I don't recall any specific mention of landscape gardening services as such. I don't think.
Okay.
But I can come back to that point.
Coming in thick and fast now, James. Does sign installation and manufacturing come under CIS rules? Yeah, there is a signage can be a tricky one sometimes. And I think also from a VAT perspective, James, it can present a few issues, can't it? I know we've had a client operating overseas where the place of supply and that kind of thing can come into play.
Sorry, I just looked up the bit in when you must use the reverse charge, and it says services which are an integral part of preparation or completion of construction services, so site clearance, earth moving, excavation, laying of foundations, site restoration, landscaping, and the provision of roadways. So again, if that was a service that would normally be one where you would charge VAT, so on a commercial type project would be an obvious one, then in principle, subject to meeting all the other conditions, the reverse charge would apply.
We'll just pick up a couple more. This is an interesting one. On a mixed use supply that is above the 5% threshold, reverse charge, would the whole supply be treated as reverse charge? I think it would, wouldn't it? 5%
yes.
Isn't like kind of a kind of a banding as such. It's all or nothing.
No, and that's right, because originally when this was first introduced, HMRC said, look, even if there was £1 on an invoice was a reverse charge amount, then that would bring the whole thing in. Now they're saying that there's a wider tolerance, but if it's over 5%, then as you say, it brings the whole thing in.
Mm-hmm. And just one more, I think, just before we close off, we will come back to the questions we haven't answered. We'll come back to you directly. I just lost it there. Can you please advise, this is from June, can you please advise if schools are included in the reverse charge?
Schools?
So this would be schools, presumably receiving construction service invoices.
But a school would a school be likely to be an end user?
Indeed, that's what I'm thinking.
Rather than CIS registered. But there is a category, isn't there, of CIS if you're a big buyer in of construction services, isn't there? Like
that's right.
Term for it, isn't there?
It's the deemed contractor rules.
Deemed contractor,
fall within that. I mean, the school would need to be undertaking some pretty significant expenditure in order to fall within that. So that's a in a classic tax answer, that's a potentially is the
it depends. Yeah.
It depends. Yeah, it depends. Okay, Joe, can I hand back to you just to close off then, please?
Can indeed. Thanks very much, both. Really interesting, and thanks to everybody for all of the questions that we've had. There are a couple more questions to go, so we'll make sure that we capture those and come back to a question here from Diane and Stuart, so we'll pick up on those separately. Thank you very much, Craig and James. As I mentioned, a recording of this webinar will be made available on the Brown Butler website, either later on today or first thing on Monday morning. So please do go and have a look at that, and we will let you know by email. So guys, thank you, and we look forward to our next one.
Thank you.